Hey there, Vinny from Project Frugal. Another 2 weeks, another $1,000 into Denise's portfolio. Let's check it out. Here we go, straight into the portfolio, $62,236. This is not quite the same as what the app proclaims. We're out by $50 odd, $60 odd, and that's because of warrants. So we're not really counting warrants here. We've got some warrants here. What have we got? We've got Barramundi Limited warrants, $52.51. And we've also got Kingfish warrants with another $12.87, so 60 something dollars. We don't care what happens with the warrants. They can just sit there, do whatever they're going to do. Maybe they'll return some money. Who knows? We'll find out eventually, I guess. $58,500 directly invested into stocks, shares, whatever you want to call them, equities, investments, instruments, blah, blah, blah. And $3,726.57 into the Sharesies Save, currently earning 4.6%. Let's go and have a look at that. Yes, it's still 4.6%. We just chuck any money we get, any money from dividends. When we put the $1,000 in, that pretty much goes straight into the Sharesies Save, so we can earn a little bit of interest. If we have a look at the interest tab here, you can see a little bit of interest that we've got. We've got an interest adjustment. Strange. Last month we made a whopping $10.22. Obviously you've got to pay tax on some of this as well, so I'm not sure if this is before tax or after tax. Let's go back. Here's some tax here, $1.79. More deposits, interest $10.22. So if you take $1.79 off $10.22, what does that leave you with? I got no idea. $8 something, maybe. $9, I don't know, $8 something. Well, the money's doing something at least. It is actually making a little bit of money, and when we get up to that magical $4,000 mark, that's when we get another Sharesies plan, and that's when we'll buy some more shares. Probably 4 lots of $1,000 into different things. $3,000 onto the auto invest and $1,000 of regular shares, all that for only $7. Great deal, better deal than what they had previously. Moving over to the application, let's go and have a look. A good day today. It was a good day yesterday as well. Up $284.60 on the day, $62,170. That's what we're going to be quoting on this particular episode. We're up $77 altogether since the last episode of Road to 100k. Plus the other $1,000 that we put in, so the balance has gone up by $1,077, but the portfolio is up another $77. It's still at a loss. We go down here, we're going to go with this loss here, $2,835, so it's under $3,000 the total losses for the portfolio, which is better than the $6,000 it was at one point. And over time, that will increase and improve, and we'll get back to negative nothing. Or positive nothing, either one. Sounds good to me. Plenty of dividends coming out in December. They're listed here. We've also got a little bit of dividends that have been quoted for January. $82.04 in January, $429.45 in December. Total dividends to come, $500. So if you take $500 off the $2,835, well, you're down to negative $2,300, which is not too bad. Australia, ANZ Bank, Australia New Zealand Banking Group Limited, paying $136.07 on the 22nd of December, so a nice little Christmas present there. We've got Barramundi paying $46. We're not going to be selling that, even though it's actually lost money. We'll just hold on to it. We'll get dividends every 3 months. Eventually it'll break even. Eventually. We've also got Frugal paying a whopping $5.46. That's not a lot, is it? Doesn't pay a lot, that one, but we've lost $24 overall, so maybe not a good investment. It has been going up in the last wee while, however. Kingfish, $31.89. Marlin Global, same deal as Barramundi and Kingfish, not performing all that well in recent times, but it is paying out $38 in dividends shortly, again on the 15th of December. Also, we've got Turner's Automotive, $82, Westpac paying $69, and the Warehouse paying $102. One of the big losers, down over $1,500. That includes the dividends since we've had this particular stock in the portfolio. In terms of analyst recommendations, well, if we were going to go off any of these, Contact Energy is a 2, which is the best deal out of all these. We've also got Heartland Bank, which we do like to invest in. which has made a whopping $95 all up on the portfolio since we've been investing for the last couple of years. What else we got there? We've got Fletcher, Fonterra, All Possibles, Infratil. It's listed as a hold. I don't know how long when these analysts do their predictions or what have you. Are they correct? Well, they do crunch the numbers, and I'm sure they're looking at all these spreadsheets and forecasts and PE ratios and all that sort of stuff, and coming up with what they believe is the best price for these particular stocks. And what else we got? Somerset Group Holdings, that's surprisingly up finally. So a lot of people over time will be retiring and wanting to invest in retirement, or actually go into retirement villages. So that's really is a bit of a long-term one. That one doesn't pay a lot of dividends. However, over time we're just hoping it's going to go up. And Turner's a great payer. Every 3 months it's going to pay out, and we're going to get $82. We have got quite a lot of money invested in there, almost $7,000. Will we put some more in there? Well, it's listed as a 2.0 for a buy. Quite likely we will, especially because it does pay 4 times a year, and it'd be nice if we could get that up to $100 every 3 months. Westpac paying out in December as well there, which we've already stated, and $69. Based on $3,000, is that a good deal? It only pays out twice a year. Well, you be the judge. Moving on to the share allocation, nothing much has changed here because we haven't been buying anything apart from the actual wallet amount going up. That's about it, $3,726.50, soon to be another $500 in December, plus the next couple of weeks we'll be putting another $1,000 in, so we'll definitely be buying next time round in the next 2 weeks, buying some more stocks. But what will we be buying? Who knows? If you've got any tips, leave them down in the comments below, what you would be buying in terms of the New Zealand stock market. We'll have a quick look at the NZX50 charts. You can see it hasn't done much in the week. Over the last fortnight, it's gone up and it's gone down. It's pretty much break even in terms of that, but definitely improving over the last month. In the last 6 months, there has been this horrendous dip when everything was going south from literally August through to November, but it's carrying on back up by the looks of things at this stage. It's hopefully moving on back up. So the stock market never stays in one place, that's for sure. And over the last year, it's seen some heady heights, and then it's dropped a little bit, and it definitely has been a bit of a lull over winter and spring. Just coming out of it now. Let's hope summer produces some nice sunny days and some good stock market returns. Moving on to the dividends finally. As you can see here, we've made $2,346.97 with another $429 at this stage and 45 cents to come in December. So if we add $429.45 plus $2,346.97, how much is that? 24 plus another 4, closing in on $2,800 for this particular portfolio of $62,000. $2,862,000, that's not bad. It's probably around 4%. Maybe we should dig the calculator out. I think we'll just leave it till the end of the year and we'll figure it out at that point, whatever the balance is, because it is an increasing balance as well over time. So if you put in $500 a week into the portfolio, if you're getting $2,800 out of that, but if you go back a few months, you wouldn't have had $62,000 in this portfolio. You might have had $40,000, for example. Let's say $40,000, and you're trying to still get dividends out of that. So it is an exponential growth in terms of the numbers and the dividend returns and all the rest of it. We're just trying to get at least 4% overall on the dividends for the portfolio, and hopefully they'll be paying imputation credits, thus eliminating any tax obligations on our part, or at least minimizing them as much as possible, because the IRD doesn't double tax these things if they have imputation credits associated with them. And apart from that, nothing else to show too much of any interest on this particular portfolio, but we do look forward to getting up to 2/3 of the way there once we reach the magical $66,667. We'll be 2/3 of the way there, and we're definitely on the home straight. Be nice when this gets over 70,000 or 75,000, 3/4 of the way there. That will be fantastic. When the series does conclude and we reach the magical $100,000 mark, we might put out a couple of update videos down the track, but the goal is simply just to get this up to 100,000, follow along the journey, see if we go up, see if we go down. It's been down for quite a while, and just track it really. And that's about all the time we've got for in this one. Thanks for watching till the end. Don't forget to hit the like button, hit subscribe if you haven't already. We'll catch you in the next one. See you later.